Hello, everyone, and welcome into CrushTheStreet.com. Got an exciting new guest on the line with me today. He wrote the book Bank to the Future, and he spoke at the first ever Bitcoin conference in the world. He's the CEO and co-founder of BankToTheFuture.com, BNKTOTHE Future.com. And it's a platform for investing in fintech opportunities. And you know what? We're going to be talking to Simon Dixon. Simon, thanks for coming on the line with me today.
Hey, thanks for having me. I've been hearing you've been doing a lot more crypto content recently, so it's a real pleasure to be here.
Yeah, you know what? We made a sharp left turn. I mean, we obviously got heavily involved in talking about sound money and covering the economy. And you know what? If you're paying attention, you have to come across Bitcoin. And I know there's a lot of people. I'm getting texts and emails from friends and people on the internet right now that are just learning about it. They're like, "What is this news with Jamie Dimon? Is Bitcoin dead?" And I'm like, "Wait a minute, you're just learning about this." And Bitcoin's not going anywhere. But there's so many people just learning about it, and I happen to be around and get involved with it right as it started to really take off, but not as early as you. So if people haven't heard about you, just tell people how you came across cryptocurrencies, specifically Bitcoin, and how you got involved with it.
Sure, yeah. So I'm not a techie. I'm a finance guy. I was working in investment banking. I did 2 years as a market maker, manipulating London Stock Exchange, alternative investment market stocks for a couple of years. And then I was in corporate finance doing IPOs for mid-cap companies for an investment bank. And in 2006, I decided to throw in the corporate towel and focus on a particular passion of mine, which was returning to a lot of the stuff that I learned in university in economics, which just didn't quite make sense to me. So when I spent a couple of years in the banking side, there were things that many of the people that I was working with really had no comprehension about what actually is happening at the high level on the investment bank's balance sheet and the retail bank's balance sheet, and how that ties into money creation. So I decided in 2006 that I just wanted to really dive deep into that, and I wrote a very geeky book at the time, which I'd called the first draft of Bank to the Future, which was really a collection of papers on systemic risk in banking, and some of the problems. And I identified three problems, which you can probably go into, which led me to Bitcoin, which is that when you deposit your money with a bank, the bank actually becomes the legal owner of that money, and that has all sorts of consequences when society cannot own their own money like cash. The second is that when you deposit it with a bank, the bank actually spends that money. And because all money is actually digital and owned by banks with, a promise to repay you, then it means that the economy is at the mercy of however the bank decides to spend that money. And if they decide to spend that money on riskier things, then the entire economy and currency is at risk. So that was the second point. And the third point was helping people understand how monetary policy actually works. Most people think it's like a piggy bank, where a bank is an intermediary between borrowers and lenders, and the central bank creates money. Those are a bit more advanced. Think that it works through fractional reserve banking, where you have to have the bank has a bit of money on reserve, and then banks are able to leverage that money and create many more than they have on deposit. But the reality is that none of those are how it works. The reality is that all money is created based upon banks' appetite to lend money based upon what kind of products they can create at the time to get more debt out there. And so every swing and the entire economy is dependent upon financial innovation as a mechanism for pushing more debt. And the more financial innovation and the more debt you can get out there, then the higher the economy will perform, and the more money is in existence. And in times of uncertainty, when financial innovation is low, and there's higher regulations and deeper regulations to protect to cool down that financial innovation, and people are not repaying their debt, then the money supply contracts. And so we're at the mercy of investment banks for financial innovation and retail banks for actually deciding where they're going to issue those loans. And so these were the three things that I pointed out. And that is the exact thing that got me into Bitcoin, because one of the early developers, a gentleman called Amir Taki, was running a conference on this thing that one of my friends had told me about, but I'd never really looked deep into. But as I was writing the next draft of the book, I decided to go deep into it at the time, and that was this thing called Bitcoin. And he was running what I think was, it was the first conference in Europe, the second conference in the world, on this subject called Bitcoin. And at the time, you could only really attract about 40 people. About 20 of them would be, anarchists, and the other 20 would be, really hardcore devs. And really, the foundation of Bitcoin was being formed then as these, really anarchy type people who had a real mission, with people that were in it just for the computer science. And I was invited to this conference to discuss more the banking side. And it turned out that when I really did dig deep into Bitcoin, it solved those three problems in its own economy. And so it created its own parallel economy, which at the time, it was very unclear to me whether this economy would succeed, because the challenges were just immense, but it was just absolutely fascinating to me. And so to recap those three things, when I said with banking, the first thing is banks own your money. Well, with Bitcoin, it created the first digital form of cash that you could actually own. And so Bitcoin allowed you to own your own money, which was the first identified. The second was that banks spend your money. With Bitcoin, it attached to this technology a peer-to-peer payment system, whereby you could transfer that value from anyone that actually downloaded this wallet as well. So therefore, it solved the second problem by creating this peer-to-peer payment system, which was independent of the whims of bankers and politicians and how they want you to spend your money.
Wow.
And the third, which just absolutely fascinated me, and the piece that everybody should really understand. I'm just going to turn my Telegram notifications off. Excuse me. I've done that. And the third is the monetary policy. Now, it's a little bit more geeky for people to understand. So if you're new to Bitcoin, it's really worth taking just a little bit of time to understand the economics of the monetary policy. And the first thing really to understand is that unlike currency that's created by governments, which is inflationary, and by inflationary it means if you just leave your money at a bank and you don't add to its supply, then your purchasing power is guaranteed within that domestic economy to go down in time. You'll be able to buy less goods with that money. But Bitcoin is designed to be the exact opposite. Now, it doesn't work in the short term because it's a very volatile. And the reason it's volatile is because it's a foreign currency to everybody. And so you're pricing it in the way you think. You're pricing it in US dollars or renminbi or pounds or euros. So any international trade is volatile. Even currency pairs that are traded against each other are very volatile. But because it's a foreign currency to everyone, you think of it as volatile, and it is volatile short term. But the economics are designed whereby that in the long term, without going too deep into it, it's a fixed supply, and the money supply increases at a smaller rate every single 4 years. And so you end up with this kind of, if Bitcoin got traction at the time, that was very unclear whether it would, then the supply of money always outstrips the demand for money always outstrips the supply, and therefore it's kind of a deflationary currency where its value goes up over time if you're a long-term holder and a saver. And therefore, those that are saving in Bitcoin should, if everything went to plan, be able to massively increase their purchasing power over time, and it acts like a global savings account with a peer-to-peer payment system attached to it that you can own, and that is absolutely game-changing.
Wow.
And that was what really, really excited me about Bitcoin. And then really, I made some early investments there. I was investing in some of the first companies like BitPay and some of the exchanges like Bitstamp, Bitfinex, Kraken, and many of these other things. So I started dedicating myself more and more to it. So we created banktothefuture.com as a platform whereby we had good connections in the industry. We were getting access to be able to invest in some of the best deals in the sector. It's a lot easier to say this now because it's a lot clearer, but at the time it was ultra speculative. And now to me it seems not so speculative, but it is still speculative to others. And so we created this platform, banktothefuture.com, where people could co-invest on the same terms as us, as long as they're able to sustain those risks, as it's still an ultra high risk sector.
Oh, absolutely. Well, and Bitcoin has always been trying to prove its current value. There's no time in history where people were $50 Bitcoin is not in a bubble, or $100 it's in a bubble, $1,000 certainly it's in a bubble, and 4,000, it needs to prove itself for the future to justify why it's worth 4,000. And I see why it's worth even more than that. I think it's destined for some big numbers, whether it's now or maybe a few years down the line. I'm not 100% sure on that, but I am definitely bullish long term on Bitcoin.
Well, you just got to look at the economics. The economics are, a lot of these Bitcoins have been lost. There's only so many of them that exist. There will never be more than 21 million. And already the demand today is way greater than the supply. And so while short term people might be using it for speculation and they might panic sell, there's a ginormous amount of people that are using it as savings and using it because of the sheer utility that having your own money and being able to transfer it to anyone in the world without any censorship provides.
Sure.
And that utility is already clear. Years ago, it wasn't clear. It was all speculative. It could have been a Ponzi scheme. It could have required more and more investors to come in order to sustain the price. But the Bitcoin we're in today is the utility has proven itself, and it's no longer what I would call that speculative investment, because the demand already is enough to just drive the economics and the fixed money supply. And every 4 years, the number of Bitcoins created being halved until eventually there's no more Bitcoins.
Yeah, one of the things I've said in the interviews is that, in 2011, 2010, 2011, 2012, it was monopoly money. People they didn't know what to expect of it. And then 2013, it's speculation. And 2014, 2015, people tended to forget about it, except the true fundamental uses of it. And then going into 2016 and 2017 and into 2018, it's really becoming an asset class, and it's indelible what we are seeing. It's we can't erase it. And one of the things we have right now is, and it's something that I was involved in a documentary we created in 2013, and it was called Banker's Worst Fear. Bitcoin is Banker's Worst Fear. And, take that title as you will. But look what we have now. We got Jamie Dimon coming out and just trashing Bitcoin. Of course, it's now when Bitcoin is thousands of dollars, not when, where was he when it was 50 or 100? Totally missed the boat on this, but now it's thousands of dollars, and he's calling it a scam. It's going away. There's no real value here to it. And I'd love for you, someone who really understands Bitcoin, to just kind of make the case for why Bitcoin can be trusted to be around in many, many years, especially in an environment where there's a lot of competing cryptocurrencies.
So the important thing to understand is that there are no competing cryptocurrencies. There is only one store of value that exists today, which is a digital store of value that is secure enough, has got enough security behind it, that it is powered by hundreds of thousands of computers all around the world, that all trust that it will have more value in the future. And so just to understand kind of the economics behind it, the reason that Bitcoin will still exist in the future is because it doesn't require a central bank to exist. So whatever a central bank does, while that might influence the economics of how people perceive Bitcoin to be, so every time a central bank does something that is perceived as negative to the economy, or every time an investment bank does something that's perceived as negative or even the retail banks or any financial sector, or even every government, then Bitcoin gets ginormous pockets of liquidity. And so all you've got to do really is Bitcoin doesn't need to succeed. Bitcoin just needs to do what it's already doing. And as long as the economy continues to do bad things, then more and more people will find a reason to want sound money that's deflationary, that increases their purchasing power over the long term, which they can spend as they wish, which is unseizable, and they can truly own, like digital cash, and they can send anywhere in the world to anyone else with an internet connection. That utility is very, very useful to a lot of people. Now, it might not be useful to you today, but it wasn't useful to the people in Cyprus until their banks were bailed in. It wasn't useful to most of the world. In fact, it wasn't even motivation enough to create it until the financial system imploded in 2008, and the need for it was actually created and launched in 2009. It wasn't very useful to people in India until they made their largest denominated cash illegal, and it ended up making, a ginormous percentage of the population lost their life savings and they had to queue outside banks to try and get back the money that they thought was theirs, that they needed to wash through the banking system so that the banking system could recreate what we've got in the West in India, even though the economy was dependent upon money that they owned, i.e. cash and gold. It wasn't really useful to people in Venezuela until their currency became more volatile and more controlled. It wasn't really useful to people in China until the governments recently decided to crack down on the exchange because they want to control their capital controls. And we've got case study. It wasn't really useful to the people in Mexico until Donald Trump became president and started, putting out very negative messages about the relationship between Mexico and US, which then made their currency less useful. It wasn't really useful to people in Britain until they decided to Brexit and leave put the currency under a 25% contraction relative to their foreign currency. So all Bitcoin needs to do is continue doing what it already does. Because it already has enough security behind it to mean that it is independent of any government or central bank to actually shut it down. And by that, in order for a government or central bank to shut it down, so let's say China really want to go aggressive on getting rid of Bitcoin. Well, what they could do is they could, Russia, if they wanted, could go and bomb all the Bitcoin miners in China, which are securing all the transactions. And yes, that would certainly have an impact on Bitcoin. But all that would do would end up with somewhere else in the world, in Iceland or Mongolia or anywhere else in the world, popping up as an opportunity to start mining some of these cheap Bitcoins. And mining is the process of verifying every transaction, performing the role of the central bank and the retail bank. It's kind of like Visa. If you're a miner, you run some computers and you verify every transaction, that when I send money from my wallet to your wallet, every miner verifies that transaction is real and exists. So you don't need a central bank or a bank to do that. And there's hundreds of thousands of them distributed all around the world. Yes, they're somewhat centralized in China at the moment, but the recent attack from the Chinese government is only going to cause more decentralization and more distribution of mining all around the world. And so in order to attack it, you'd have to invest billions and billions in simultaneously trying to shut down these physical hard devices all around the world, which is statistically and almost physically impossible for any government to achieve. And so because that is actually statistically and physically impossible, with any other cryptocurrency, that's totally possible. If JP Morgan creates their own cryptocurrency, then it will be deeply centralized and controlled by the policies of JP Morgan. If China creates their own currency, then you're just essentially digitizing the currency that already exists, and it won't make any difference. It will be the same thing. So none of these are a real threat. A lot of the altcoins now, while they might want to come along, it's extremely challenging to recreate this security that Bitcoin has actually got behind it. It's kind of like a one-time freak black swan invention that I believe just won't happen again. Like you could come up with a better version of the internet right now, but getting everyone to use the internet and build websites on your version of the internet will be an insurmountable challenge.
Mm.
And you may have competing ones. For example, you might come along and create a version of the internet that's fully anonymous. And that's great. That has utility and value in itself. And we do have things like that with Tor networks and dark webs and things like that, which have tremendous value for that certain niche. But there's still only one internet. So I liken cryptocurrencies like that. Bitcoin is like the internet. And then someone can come along and create a privacy-centric currency, and it will serve a certain use, but the currency still needs a store of value to be traded in and out of. And that store of value is Bitcoin. And in my opinion, no matter how much you think Bitcoin can be improved, it has the soul and mind of the best the best developers in the world that are working on making this a better Bitcoin every single day. And while it's easier to code and change and make some centralized version and pretend that blockchain's the innovation, blockchain is the technology that's very easy to replicate. It's just code. The security behind it, the utility behind it is virtually impossible to replicate. So it has many of the properties of gold in that there is only one gold. You can have silver, you can have other things, but this set of circumstances that led to Bitcoin's creation are a one-time story that I believe will never be repeated again.
Wow. Well said, Simon. Yeah, so many other things that, maybe you're thinking or trying to articulate. I think you just did that for myself and the audience right there with why Bitcoin really is the gold standard for cryptocurrencies. And you made some strong points there.
One more very important I forgot is that it is ultra important that Bitcoin was created by a group of people or a person that were absolute cryptography geniuses that were capable at the time of keeping their identity fully anonymous. And the fact that Bitcoin and the original development team all left in those early stages meant that there is no central point of attack. Every other cryptocurrency has a central point of attack, and by central point of attack means that it exists more in individual miner servers, or the developers are known, because the only way to promote a new cryptocurrency now is to kind of leverage your reputation and let the world know who you are and add credibility to it. Ethereum's an example. Vitalik came along, created Ethereum, and in order to let the world know about Ethereum, and it was an incredible achievement of what he's actually done, and it's a very different thing to Bitcoin. But he had to lend his credibility to it, and now Vitalik becomes the central point of failure and attack should the government ever want to shut down Ethereum. And so Bitcoin doesn't have that. Every other cryptocurrency or every one to come will have something like that, because Bitcoin was created in a time when nobody cared. Whereas today, if you create something, everyone cares, and you've got to kind of get around the whole, is this scammy? Is this a Ponzi scheme? Who is this? Who's behind it? You've got to get over that at the time, and that is, again, a set of unique circumstances that don't exist today.
Yeah, again, strong points. And I was listening to Vitalik speak in a public interview that he was doing. He was addressing a crowd. And, you got to give him credit. Obviously, he's one of the smartest people in the world. I think you're a very smart person, and you really have to acknowledge that we're seeing the smartest and most intelligent people in the world enter the blockchain space. And one of the things he said, which I'd like to get your thoughts on too, is in 2 years, and he was speaking in a general sense, that Ethereum would be able to handle what Visa does transaction-wise with scalability. Obviously, a lot of concerns right now with scalability, Bitcoin's ability to scale, and even Ethereum and these other ones. But you got a lot of people working on these very things that people are concerned about, and there it needs to obviously grow because we're hitting these limits. And what are your thoughts on this?
So this is more of a, and I'll give a bit of a cop out answer. It's more of a technical answer. I could give a technicals, but you could interview much better people than myself on the technicals and scalability. Here's one thing I know, and having been here since seeing this in 2011, the community is extremely resilient. It's kind of following a growth path, just like, again, let's use the same analogy, the internet. Um, Originally, the original version of the internet, you could not upload a video to. You was no way you could ever stream. YouTube just couldn't exist. Netflix couldn't exist. None of these things could exist. But the way the internet grew is it kept reaching capacity. And every time it reached capacity, someone would code up something new, think of something new, and whether and the power of open source would kind of take over where people could collaborate on a global scale on something that they thought was really important. Well, Bitcoin's kind of been through, the same thing. It has its challenges, and every time it reaches its, maximum challenge, which is what we recently saw with the scaling debate, I'm amazed at how it actually solves itself through free market game theory, where someone comes up with a new solution, they decide to code something up, then the two start competing. People decide which code is best. It reached consensus through this large public political process, which seems like chaos, and the media reports it as drama. But what it actually is proving without a shadow of a doubt that Bitcoin is not controlled by anybody. Because if the miners want to do something, they can't control it. If the developers want to do something, they have to get consensus of the others till the change happens. If the users want something, they still can't get the change without getting the consensus needed. If the businesses want something, they can't control it. If the government wants something, they can't control it. If central banks want something, they can't control it. And so Bitcoin has this amazing market force of only working on what is the most important to the most number of people at the time. And so scalability became one of those things more recently. And it was a 2-year debate. Now, with Ethereum, if you want to scale, Vitalik could implement something, tell the world this is what's important, and everyone would agree and it would happen quick. And that is the exact reason why it's a weak. That's its exact weakness. Because if something can scale, if something can change fast, then that's how governments work. You say the person at the top decides what they want. He sends the message across and gets everyone to vote and put together a campaign to do it. And that's exactly how central banks, institutions, and every type of centralized thing work. Well, Bitcoin's the only thing that is completely decentralized. And so therefore it takes a long time to reach some kind of consensus. And it's got the most responsible developers that take a long time testing things, because this is a $60 billion value right now, and we have only just started. If you're watching this podcast, if you're listening to this right now, it would be very easy to think, I've missed the boat, it's too late, Bitcoin's expensive, I need to look at something cheaper like Ethereum or Litecoin or whatever it is you might think. Now, those are all speculative investments, but there's only one store of value, as I said earlier. So the market tends to really react to these things. And I can tell you from 2011, when Bitcoin crashed to like $3, the whole market was kind of in panic at the time. Then it came back up to $10, and everyone was telling me, "Oh no, it's too late. I've missed the boat." When Bitcoin hit $100, everybody was saying, "Oh, Bitcoin's, that was a speculative thing. It's too late. It's a bubble. I've missed the boat." When it hit $1,000, it's too late. I've missed the boat. It's a speculative bubble. Then it crashes. Oh, Bitcoin's over. Bitcoin's dead. Every story comes out. I told you so. Then Bitcoin goes back up to $1,000. Tulip bubble this. I've missed the boat. It's too late. I should have got in earlier. When it hits 2,000, 3,000, the story never changes. When it hits 10,000, people listening to this interview will be saying, "It's too late. I missed the boat. I should have got in earlier." When it hits 100,000, it's too late. I missed the boat. I should have got in earlier. It's in a bubble. And if Bitcoin does what it says it's going to do, which is it continues to be a store of value, it continues to derive more utility than the additional supply, then over the long term, it can only be a deflationary asset class. And the only reason that this doesn't go that way is if there is, and there is obviously an element of risk that there's some, this is new, there's some unforeseen technical bug or something like that where something comes along that allows, and I don't know whatever that looks like, and that really is the risk. The only risk is, does this scale? If this scales, if we can get this to scale, then it can solve more and more user cases. And if people start putting more and more data on this, the only blockchain that's secure, then you actually have infinite user cases of what you can do by having this peer-to-peer network where people can transfer value, and the utility can only go up and up and up. But if it doesn't scale, if this is the maximum scalability, and by the way, that's just not the case, if this is the maximum, then we already have enough demand for Bitcoin to suck up more and more of those that are storing their value in gold. As it turns out, that gold is actually a hedge against Bitcoin failure, in my opinion, today. Gold is a hedge against internet failure, but it's no longer the hedge against financial uncertainty that it used to be ever since Bitcoin and the internet was created.
Simon, you mentioned Bitcoin's value and that the fact that it's a usurpation of the banking system, governments, people going around and sidestepping the controls of a centralized world. And I'm wondering if you believe that, I guess that Bitcoin's use will go mainstream, because it really was people who were questioning the system that came and are buying into Bitcoin in the early days. And I'm just wondering what your thoughts are on the mainstream adoption of Bitcoin, and is the fundamental use case, people kind of going around the banking system, is that going to be something that continues to be the case, or is that going to be a mainstream idea, not going through the traditional centralized system? So some thoughts on that.
So firstly, it's important to understand that I don't believe that Bitcoin will be, the one currency of the world. I really don't believe that. I believe that Bitcoin will be a foreign currency to everybody. And the utility of that foreign currency is already defined today and makes it worth, 4,000 or whatever dollars we are today. The utility and different user cases can only increase or stay where they are today. And the existing user case is that people are using it as a kind of exit. Think of it like many people are using it like a pension plan, an exit to the financial system, whereby they can store their own money and play on the deflationary nature of it. But they will always spend money in their own currency. They will always think in their own currency. If I land in China, I'm going to see things priced in renminbi. If I land in the US, I'm going to see things placed in the dollar. And of the currencies that are created by banks and governments, US dollar at the moment is without a doubt the highest utility. The reason is because I can spend a US dollar in more places than I can spend anywhere else. And I can then think of value in terms of US dollars. Now, when it comes to Bitcoin, I'm never going to look at a glass of milk and say this costs 0.123678249, Bitcoin. That would be a very expensive glass of milk, but you get the point. That's not going to happen. What is going to happen, in my opinion, is that traditional fiat currencies are going to get less and less valuable in people's minds. And by that, I mean you will still spend in your local currency, but you will hold the minimum amount in your local currency. And that is already happening today for a group of people, a handful of, several 100,000 people that at the moment, with their understanding of Bitcoin, want to hold as least fiat as possible. They still want to spend their fiat because they don't want to spend the deflationary money. They want to spend their inflationary money. The money that goes down in value is what they want to spend, and the money that goes up in value is what they want to store. And so that's why many people are like that. Now, financial institutions, this is the accumulation phase we're in right now. Many, many people use the China news to accumulate a vast amount of Bitcoin. And they were selling it from people that don't understand the economics. They were buying it from people that don't understand the economics. And that was the institutional accumulation phase. This is where all the people that were naysayers realize and have taken the time out to understand the economics behind Bitcoin, accumulated from all the short-term fearful people that were selling into the financial institutions, and I believe at the government level, I think central banks will start accumulating at this point. The next 3 years is about accumulation. It's a race for the cheap Bitcoins because the world, kind of everyone, most people in the world have heard of Bitcoin at least now, and then a handful of them actually know what the economics behind it and understand the economics behind it. The others have just heard what the press have told them, and they're just like Ponzi scheme, tulip bubble, and that's fine. That allows the people that understand the economics to accumulate. And we're still at that very, very, very early accumulation phase right now. And it's certainly not too late if Bitcoin achieves what it does. Now, what is the path to mainstream? Well, you've got to kind of understand the political environment right now. And so this takes a step back to understanding where we are today. Governments have several agendas, and central banks have several agendas. One of them is, a global desire to tackle money laundering. And this global desire to tackle money laundering means that everybody needs to, take in their cash, swap it for bank deposits so that the governments and the banks can understand every flow of money that you have. Now, that leads to a very inconvenient customer user experience where if you want to spend your money, you have to explain to the bank everything they're doing so they can then explain it to the government, and you need to provide evidence. And I understand this doesn't affect you at the small transaction scale, but it does affect you at the large transaction scale. At the small transaction scale is when you start traveling and the world is going more global and people are traveling more. You land in China, you didn't tell your bank that you were going to be in China, you spend your card in China, they switch it off. You then have to call the bank and explain to them, oh, by the way, I am in China. It wasn't someone that stole my card. And then they might switch it back on once you tell them what you're doing with your money and where you're going to be. Then you land in Venezuela and you realize that they switch off your card simply because you're in a country that was politically unstable, and then try going to Syria and see what happens to your money. So what is this desire for the governments to exercise control over the world through anti-money laundering and anti-terrorism means that all consumers have a very bad user experience when using their money. That is the one of the forces that's driving people to try different things, so that they can get money from A to B in a way that they actually want to get it there. Now, the other trend that's happening right now is a war on cash. So as we already touched upon, in India, they and across the world, Europe, Australia, UK, Venezuela, they all see cash as a big problem. In China, they've kind of eliminated cash through fintech companies like WeChat and Tencent and Alipay, where people have digitized their cash and they now send money peer-to-peer from their WeChat app, which means that everyone can track all the microtransactions they're making, and cash is slowly becoming eliminated as you can pay for your taxi and everything using technology. But the same is happening in countries like India, where the entire population had to risk their life standing outside banks while people, were trying to mug them for their bags of cash because they decided that they're going to make certain notes illegal and they want to wash it all through the banking system so they can leverage it many times over and create economic prosperity through debt following the Western model, and the crisis and the booms and busts that will follow. That trend of war on cash is driving a new user case of people wanting to still, have a digital version of their cash as it actually becomes illegal. The final trend that's worth understanding is financial institutions and governments all around the world have seen what's happened to Bitcoin. They are scared of Bitcoin, no doubt about it, and they want to monopolize it and create their own version. So what is really interesting right now is that all the governments are actually putting together their own digital currencies. Every central bank that I know of has got an initiative, a blockchain innovation division. Blockchain is code word for create our own version of Bitcoin before Bitcoin becomes too threatening. And they all have their own departments looking to create their own version. Now, what I need you to understand is that this has got nothing, while it is motivated by Bitcoin, it's completely not a competitor to Bitcoin. In fact, it makes Bitcoin more valuable. Let me explain a bit about that so you can understand. What they will be doing is the current way of creating money is essentially they have outsourced the money supply to the private banking sector. As I said earlier, the way that a new deposit is created is by a bank issuing a loan. Now, there's a tiny amount of coins in cash that the central bank creates, and they do, manipulate interest rates in order to determine how much money the banks actually create. But every currency in the world is already digital. Bitcoin didn't invent digital currency. Banks invented digital currency. When they got what many people call fractional reserve banking, which is a bit misleading because there is no fraction and there is no reserve, they invented digital currency when the government gave the ability for banks to create new deposits every time they issue a loan. And that meant that 97% of most currencies in the world went digital and they just existed on the bank's balance sheet. And if you repay your debt, then those monies go down. If you take on more debt, then the money supply goes up. That is the digital currency. Now, the problem is that because it's all backed by debt, that creates systemic risk in banking. And the banks always have to find a new financial innovation or new technology that allows them to increase the money supply because they're caught in a digital currency Ponzi scheme called digital fiat, where they have to increase the supply to get economic prosperity and balance their books. And so that's why you see retail banks pushing new innovation onto investment banks. And the last one was, the mortgage-backed securities that caused the crisis. The next one will be whatever it might be. That it could be, this will always rehypothecate until eventually it can't. But where was I? So yeah, they're creating because banks have systemic risk, and after the last financial crisis, nobody has a desire the governments can't get away with doing a bank bailout again. The public just will start rioting, burn down fires in the streets if they give that amount of money to the banking system again. The banks don't really want to do a bail-in because a bail-in means you're essentially just taking people's deposits and using it for your bank. But that kind of means end of your business model, end of the road, which they may not care about because all the investment bankers are all leaving banking in droves to work on fintech startups and blockchain applications and all getting into Bitcoin right now. But what it means is that we can't use bailouts or bail-ins during the next systemic risk event. And the systemic risk event is just around the corner. I don't know what will trigger it. It's guaranteed to happen. So you've got to look at what is the government actually going to do during the next systemic risk event, the next crisis. Well, what they're going to do is they're going to allow the bank to go bust. but they don't want you to lose your money. At the moment, if you allow a bank to go bust, then they have to tap into their deposit insurance and foot up a great bill, and they can't actually afford it because they don't have the money there in the first place. So they'd have to create some kind of, crazy product in order to prop up. And that's why you had to have the bailout, because the bailout was a better solution than letting the bank go bust and exposing the government's insolvency and depositors losing their money. So what they will do is they will just create a digital currency themselves. And they'll say, right, JP Morgan no longer exists. Everybody that has an account with JP Morgan or Chase or whatever you call it, please come to the central bank or go to your app store, download this wallet, and you will find the exact same amount of digital US dollar as you had in your bank account. The only difference is that this digital currency was issued by the central bank rather than the retail bank. And so what they're going to do is they're going to allow the retail bank to go bust, and the central bank is going to replace it. Now, the interesting thing is that is debt-free money. The bank's money was created as debt. The central bank's money was created without debt. So essentially, you're replacing all debt money with debt-free money. But there is a challenge with it, and there is a problem. That money comes from a central bank. At least with the retail bank, that was one step removed from the government. So if they wanted to, automate tax collection, they had to at least, get a court or a subpoena, and your bank could actually, give them the data based upon that, the due process. But if the money is issued direct from a central bank, then there's going to be automatic tax collection. There's going to be laws that say if we think you owe us tax, then we'll take it. And then you need to go to court to prove that you don't. If we don't like how you're spending your money, we'll have all the data on how you're spending it. And if we don't like that, then we'll just switch off your passport or switch off your, whatever they want to do. And it will be an abused system. And so what this means is that you will still use that central bank created currency because it will be convenient. It will be stable price. It will be where goods are priced. There'll be fintech companies all around the world that will build technology that sits on top of the central bank that will wipe out all the retail banks. And you'll get a better service, a better user experience for that currency. But you won't store your value in it. You won't store your savings in it. You'll store your savings in something that is actually deflationary. You'll spend inflationary money that goes down in value, and you'll store in deflationary money. And so I believe that when the banking system collapses, you won't end up losing your deposit. It will just be a movement of the data from the retail banks that will be allowed to go out of business and go bust to the central banks, and the central banks will create a debt-free currency, but it will be a highly controlled currency. And fintech companies will build user experiences that make that money more useful, but Bitcoin will be the only digital store of value, and competing to make all these governments and all these currencies more honest is an incredible amount of financial innovation that's being built on blockchain that exists outside the system. That will create in rapid amounts of innovation.
That it is really powerful. I'm actually literally, I got a notification from my Coinbase account saying that my deposit was cleared, and literally, like, I'm listening to you talk about this, and I'm like, oh, Bitcoin's under 4,000. Let's make a purchase. You make such a strong case, Simon. We're almost to the hour mark, but I want to ask you, because I had a previous guest, and he pointed something out about the coinmarketcap.com. He said the 10 top cryptos on there, all of them have a history. Only 2 have a clean history, and the 2 he's talking about is Bitcoin. The other one is Litecoin. And you actually said Bitcoin is the only one. Everything else is centralized and is vulnerable. And I'd like to get your thoughts. A lot of people are wondering about Litecoin. It didn't really have that move that a lot of these other ones had. Maybe it did from a market cap perspective, but the price, while Ethereum went from 10 to 300, Litecoin's, still at in the $50 range. So I'd like to get your thoughts on Litecoin as we close out this interview here.
So Litecoin is, the adage that it was always created with. It was created by, Charlie Lee, who I have no reason to think that he's anything but honest from all my experiences. He created it in the most honest way it could be created, and it has a very good track record and a very good history. It was much bigger in China than it was anywhere else in the world, and now those Chinese exchanges are being closed down. That's probably the main reason for the correction, because it was very popular because Charlie Lee, his origins are China, so it was very popular and had a particular connection with the Chinese people, and I have no reason to doubt it. It's great. It's performing the role of it had some of the technical innovation that Bitcoin has right now, namely SegWit and Lightning networks that allow it to scale. It had them first, and therefore Bitcoin was more likely to adopt them after being able to see them on another coin, and it doesn't explode the coin or break the coin. So Litecoin is performing that role of a test net for technology on a very fairly distributed. But even if you speak to Charlie Lee, he says it was never designed as a replacement for Bitcoin. It was designed as a hedge, a kind of silver to Bitcoin gold. Right. So I have no problem with these things. I think, and we could sit here talking about 100 different cryptocurrency and digital assets and what the problems and pros and cons are. And that's a very interesting conversation to me. But to get the final summary in a few minutes of how I think people should look at these things is understanding, look, if you're completely new to this sector, then you've got a bit of an education to learn how to own your own money. You need to learn how a hardware wallet works, and you need to learn some personal security. You need to make sure that you're implementing a process within your life of how to have unique passwords for everything. These things are very easy to do, but they're just different behaviors that people need to learn. You need to have unique passwords for things. You need to learn how to store your own money. Those are a bit of an education for people to grasp. So while you're learning that, I would suggest just take 10, and again, I can't really give financial advice, but if you want to speculate and you're willing to lose up to 10% of your income, then speculate 10% of your income in Bitcoin, play around with it, learn how it works, learn your personal security, learn what it feels like to own your own money, spend your own money, and have a deflationary currency that's volatile in the short term, but designed to go up in the long term. And then once you're really comfortable with Bitcoin, once you've got that, you might decide that you want to speculate, say, 20% of your Bitcoin on things that are way more speculative, like Litecoin, like Ethereum, like ICOs, like all these things, way more speculative. You are in the short term able to get like a 10x, a 100x, return, and you're just as easy able to lose 10x or 100x return, loss. But speculate 20%. But I promise you, I tell you exactly what the user case of all of these alternatives are. The second they go to shit, the second something goes wrong, everybody flees to the only store of value, and that's Bitcoin. And so everything it's just being used as a way to accumulate or lose more Bitcoin. So if you want to get more speculative with 20% of your Bitcoin, then feel free to do that. But my personal opinion is that 80% of everyone's portfolio should consist of the only store of value that exists, the digital store of value that exists in the world, that is censorship resistant, that allows you to own it, that allows you to spend it, and you should not be storing it on a bank-like institute. You might want to start with something like Coinbase, that's fine, but Coinbase is recreating the banking system. You don't own that, Coinbase owns it. If they go bust, you've lost your Bitcoin. If they decide to do something with it, you've lost your Bitcoin. That's an okay place to start because it's got a very nice user experience. But your next job is to get away from Coinbase, learn how to store your own money, improve your personal security, because personal security and owning your own assets is the key to being able to have personal sovereignty in whatever happens ahead. It's the key to freedom. It's the key to being able to do what you want to do, no matter what the economy throws at you. And there's one thing guaranteed: you do not know what the economy is going to throw at you tomorrow, in a year, in 10 years. And this gives you options and opportunities. And yes, you will have some fear. Yes, it's a slow transition. But I believe it's a transition that you're either going to have to make now, slowly, in your own time, or you're going to have to do it at a rapid, fast rate when you suddenly realize your bank's bailing in, or your bank's bailing out, or something, some crazy threat happens that you just can't forecast.
Wow.
And so that's what people need to understand. Get into it slowly, but the vast majority will only get into it when they have to, like the people of Cyprus, like the people of Greece, like the people of India, and like all the other countries that are going to have something that happens in the months and years ahead.
Simon Dixon, you are an encyclopedia, I must say, sir. You really do know your stuff, and it was a pleasure for me to have you on Crush the Street. If people want to learn more about you, your website, get your book, let people know where they can go and what they will find.
Okay, so best place to get me is on Twitter. I am at Simon Dixon Twit, TWITT. I've been stuck with that because Simon Dixon was taken when I first signed up to Twitter. Banktothefuture.com is, unfortunately, because it's high risk investing, international regulations means it's only open to people that have a certain net worth. So because so many people have become wealthy from Bitcoin, we've got a lot of high net worth investors there. But it's restricted, unfortunately, because of international regulations. In terms of my book, it's still as relevant today. My opinion has changed a lot since the last version was published in, I think it was 2012. But I think it's still got relevant things that people need to understand. And obviously the whole world has changed since then. And big on my list of to-dos for 2018, I've already got I've signed with the publisher to try and create the next version, but I'm just finding it extremely hard to do that at the moment. But I'm very easy. Yeah, Twitter's always the best place to get me.
Of course. Well, you're striking while the iron's hot, and the iron is very hot right now. So Simon, thanks for coming on the show, and thanks for just sharing your knowledge, your years of knowledge. You're a pioneer in this new space. And I feel fortunate to have had you on Crush the Street. So thanks so much.
Okay, thanks for doing what you're doing. Thanks for giving me a platform and just doing great work, getting the message out there, having great guests. I'm really going to watch more of your shows. So you're just doing a fantastic job. Thank you.
Appreciate it, sure. Thanks so much.